It is Wednesday, September 9th, 2020, and this is your China Update. We have 4 pieces of information to cover today, including China buys 664,000 tons of U.S. soybeans. Also, courtesy of the South China Morning Post, China's corn supply concerns grow after 3 typhoons flatten crops. Next, courtesy of USSAnews.com, China unloads dollars as gold tests support. We also have some new photos. Let's hop into it. And this comes courtesy of the New York Times. China buys 664,000 tons of U.S. soybeans, biggest daily total in nearly 7 weeks. Chinese buyers booked deals to buy 664,000 tons of soybeans, the largest daily total since July 22nd, for delivery in the 2020-2021 marketing year, the U.S. Agriculture Department said on Tuesday. The sales were the latest in a string of large U.S. farm commodity purchases by China, which vowed to import record amounts of U.S. agricultural goods this year as part of a Phase 1 trade deal signed in January. Chinese purchases in the first half of this year totaled just $7.27 billion, according to U.S. Census Bureau trade data. The trade deal called for $36.5 billion in annual purchases. USDA on Tuesday also said that private exporters reported the sale of 101,600 tons of corn for delivery in 2020-2021. And this comes courtesy of the South China Morning Post. China's corn supply concerns grow after 3 typhoons flatten crops. Concerns are mounting over the sufficiency of China's grain supply after 3 typhoons hit the country's main corn-growing region in quick succession over the past 2 weeks, flattening crops and pushing corn prices to their highest level in 5 years. The full extent of the storm's impact on this year's corn harvest is not yet known, but some analysts say the natural disasters in the northeastern corn region could lead to a drop in output in Heilongjiang and Jilin, 2 major corn-producing provinces. In an attempt to abate losses, the provincial government of Heilongjiang announced over the weekend that it had launched a battle for disaster relief and self-rescue for corn farmers, issuing them detailed instructions on how to salvage corn crops that had been flattened by heavy wind and rainfall. The expected drop in corn output comes at a time when the price of corn, a key ingredient in animal feed, has already risen sharply across China. This is partly because many farmers shifted from corn to soybean crops last year and earlier this year after the central government encouraged soybean growth. The already tight balance between supply and demand for corn is increasingly tilting towards a supply shortage following the typhoons. Corn prices increased by nearly 30% from the start of the year to 2,355 yuan, that's $345 per ton, at the beginning of August. In response to the situation, the central government has stepped up its auction of state corn reserves. The price has fallen a bit, mainly because a lot of corn that the government auctioned has been sold to the market, said Rosa Wang, a Shanghai-based analyst with agricultural data provider JCI. We are importing plenty of corn this year, so the price is falling slowly. But recently, because of the typhoons, we expect some output reductions and for prices to go up again. Concerns over corn supplies are mainly focused on the amount of land planted with the crop and the level of government reserves. A few short years ago, China still had an oversupply of corn, which led to the government to cut back on some planting and to stop purchasing corn at above market prices from farmers in the Northeast. In late August, Chinese importers signed a deal to buy 400,000 tons of corn from the U.S. after purchasing 2 million tons from the U.S. at the end of July. Nevertheless, Wang from JCI said this year's corn shortage may not be a big issue, since there are still 30 million tons of corn from government reserve auctions that have yet to be picked up. I think the main problem will be when a supply gap emerges next year. It also depends on how much corn China buys from the US next year. A large-scale purchase could help the situation, Wang said. Thank you for watching this video. If you're finding it informative, please consider giving the channel a subscribe. And this comes courtesy of USSA News. China unloads dollars as gold test support. Holders of low-yielding US dollar-denominated debt instruments should be quite concerned about the prospect of losing purchasing power. The Chinese government apparently is the second largest holder of US treasuries, worth over $1 trillion, is now gradually selling them. Chinese economist Xi Jinping announced last week that the country would aim to hold $800 billion in US debt under normal circumstances. And our last piece of information is a series of interesting tweets. And I think that's a good place to wrap up today's video. I hope that you found it informative, and check back soon for more content.